I got a recent letter from my bank on one of the mortgages that I have recently, and I thought there's a couple of things to note because a lot of you are going to be getting one of these letters very soon. Because currently in New Zealand at the moment we've got 85% of mortgages are actually fixed in New Zealand, which is interesting actually because in Australia only about 20% are, so quite a difference. So in the next 6 months, about 30% of those 85% who have fixed mortgages are going to receive one of these letters saying, what do you want to do to fix your loan? So basically what it says is the fixed interest rate period on your home loan is due to expire, and it goes through the loan details and what my balance is and what their current interest rate is, and then if you call us to discuss. A couple of interesting things that I noted on this. One is if they don't hear back from me, that they will automatically change my rate from the fixed rate of 8.25% to the floating rate, which is currently predicted at 10.5%. So if you choose to put this letter in the pile and forget about it, you know, that is quite a significant increase that you're going to get on your mortgage without actually realising it. Another interesting point that I noted on here is that it says that if you want your loan to go to another fixed interest period, you don't actually have to wait until your current one expires, because you can actually hold a fixed interest rate for up to 60 days at no cost. However, there's a wee asterisk, and so if I turn over the page and follow that down to that asterisk, it says, please note if you sign a reserve rate agreement to reserve a fixed rate and decide later to cancel it or decide on a different interest rate or term, a non-utilisation recovery fee may apply. And I thought, what on earth does that mean? Even though I've been in the business for many years, I hadn't come across that. So I decided to ring the bank and say to them, can you explain to me in English what on earth this fee means and how much is it? So basically what it means is if you choose to fix it today, let's say at 8.5%, and when your term comes up for renewal, let's say in 60 days, and the rate's actually 8.2%, and you change your mind, the banks will charge you for the amount that they've effectively lost on that for the term that you had chosen. So let's say it was 3 years, they will calculate that interest rate differential over that period of time. Plus, just for the pleasure of them doing that for you, they're also going to charge you an extra $250. So you just need to be mindful of the fact that if you're going to change your interest rate and lock it in, that it's going to cost you if you change your mind. So one of the really key things to note when refixing your mortgage is that all you are doing is actually saying for the next 1, 2, 3 or 5 year term you want to set in an interest rate. Okay, so the key advantage to that is the fact that you're going to know each month what your interest rates or what your mortgage is actually going to cost you. The other key thing I noticed about this letter is that on page 2 it says, why not top up your home loan and get the things that you want? Now that scared the living daylights out of me because I thought, that's an opportunity for people to get themselves further in debt, and there's so much mortgage stress out there at the moment. The last thing you want to be doing, unless there's a very, very compelling reason, is topping up your mortgage. So, you know, I thought that was a really interesting thing because, you know, they're writing to you on the pretense of refixing your mortgage, and then they're trying to get you to take out a larger mortgage in the same process. So just be very mindful of that.